All right, I've hit record and it looks like we're both smoking pipes now. Now you have to remind me what we were going to talk about.
Uh, we had a conversation with Sheldon Richman like 2 or 3 weeks ago, and I introduced the idea of let's say a libertarian usury, like
Usury?
yeah, a limit for interest rates and loans and stuff like that. In the beginning, you had a disagreement with me, like, oh, that does not make sense. Then I started to talk about inalienability.
Yeah,
saying like, oh, if you charge so much, you can just enslave people, and that is, it does not follow. So there is a limit. Then we start to talk sporadically about loan contracts, and I have a position. They are how can I say, bilateral, and you say I have a wrong conception, which they are like 2 unilateral contracts, and I respectfully disagree, but that is not the central point of my argument. But I want to explore this avenue if possible.
All right.
And there are a lot of small stuff that we don't discuss, but I want to ask.
Okay.
In the meantime, I read Doug French book, Just Walk Away. It's a 100 pages book, really good. And it treats up more about the psychological conditioning of, over that, and that is it's a really good aspect for my argument, because I came to believe after studying this that the whole modern state, the fractional reserve, fiduciary currency, and central banking, everything is tied together to promote this kind of economic activity, which is, in my view, antithetical.
Hey, hold on just a second. Hold on. Give me 30 seconds. Just a second.
No problem.
I thought. Back. Come on. So, by the way, so are you talking about the most recent version of the book, the one he has on Amazon, I think?
No, I just took it from Mises Institute's website. I just downloaded the PDF. Let me.
Oh, because he put an updated version out about a year ago online, which slightly, I think, has an extra chapter or something at the end.
I need to take a look one second.
And I helped him with that a little bit, and he and I are good friends. I actually talked to him. I'm not sure if I quite agree with his. He's an expert on the banking industry, but I was surprised that there is such a thing as non-recourse loans. This walk-away concept. I guess that's true. That in some states, in America anyway, if you have a mortgage, then you're not personally liable. The only collateral is against the house.
Exactly, and I think that is the right way to do it.
Well, that's one way to do it. That's one way to do it.
Yeah, my argument is the right way. That is, I know it's a really hard hill to stand on, but I think if you don't do it this way, you are just opening yourself up to be, like, let's say, to defend slavery in some way, you know, not consciously, like I want to slavery, but you give
well, yeah, but then you're against the very concept of any obligations whatsoever.
No, limited obligations in this way.
Well, yeah, but I mean, it's limited by. See, the problem is most contracts are not. I don't think most people understand this. Most contracts are not secured, is what we call secured. This is my problem with this Bitcoin idiots who talk about smart contracts. And even the Rothbard.
They are not contracts. They are just
Well,
execution tools.
it's not just that it's not a contract. It's like only a very limited subset of contracts could be done with an escrow situation. I think Rothbard has this idea in his contract theory where he talks about a performance bond, which is a little bit confused. But the idea is that you basically ahead of time you deposit the possible amount of damages or something with some third party, and then they can distribute it if there's a breach of contract or if some conditions triggered. But the problem is most
Yeah, I don't know if it's your connection or mine, but it's cutting.
Go ahead.
It chopped a bit. I don't know if it's your connection or mine.
Yeah, I don't know. It might be mine because I'm outside.
Oh, okay. Can you repeat after what he said about the third party, like the third party damages distribution?
Yeah, the idea is that you could escrow, you could deposit the possible damages or the possible payment ahead of time with a third party. But the problem is that in most contracts, the guy that owes the future payment doesn't have the money yet. So there's nothing to deposit. And not only that, contractual damages are uncertain. They could be greater than expected. Like, you know, if you're a singer and you're paid $1 million to perform at the Super Bowl and you don't show up, you might have a reciprocal obligation to pay money damages if you don't perform, and that might be $10 million. It might be more than you're paid. I don't know. It depends on the deal, but you might not have $10 million. You know, so there's nothing to escrow. So the whole idea of these Bitcoin smart contracts and escrow and performance bonds is just unrealistic and impractical, because in most contracts, the future thing doesn't exist yet. You can't transfer a future thing now. You can't transfer it to a depository now. That's the big problem I see with it.
Yeah, and the only way to solve this problem is some way to introduce credit and on Bitcoin in a second layer or something like that, and that would be just like the whole legacy system all over again.
Oh well, I don't. What do you mean credit with Bitcoin? I don't even know. Okay, tell me what you mean.
What I mean is like Bitcoin does not have this on the first layer on chain this function. And as it is a ex novo asset, like it's not an asset that we can mine from the ground or anything, we just edit the asset. People, I think there will be a demand for a second layer on which they can do a fractional reserve or IOUs and treat the second layer as a credit title and use that for settlement and trying to absorb the real economy, like the real assets, the tangible assets inside of that. Like I think that will be something that corporations will have interest to do. If they want to dominate Bitcoin, they should do it. You know, like not saying should.
So are you opposed to fractional reserve banking?
Yes.
Yeah, I'm opposed to it economically.
I'm opposed to economically and ethically. I think it's fraud.
Well,
or fraud. When I say fraud, I said in broad terms. I think it's not possible for you to have more titles than you have assets. Yeah. It's like you are ensuring a conflict.
I don't disagree with that strongly, but I just think that because of that reason, fractional reserve banking just can never work. As long as if there's full disclosure, it can never work. But if there's full disclosure, there's no ethical problem with people trying it. It's just that it's like everyone invests.
Wow, it's a casino then. It's
exactly.
Yeah.
It's an unstable thing, and it will collapse, and that's okay. But gambling is okay, is ethically fine.
Yeah, like if you say so, like for you gamble, no problem. But that is not like let's say. As it's not paired, you cannot give it as the asset, you know. So the problem is
I don't know what that even means, to give it as the asset. I think we have to clear all these terms up. But anyway, let's go on.
Yeah, like the problem that I say is like the title does not represent the full asset, because there are more titles than goods.
Yeah, this word title is used in a bizarre way by the anti-fractional reserve Rothbardians. Even Hoppe, this two titles idea, it makes no sense. As long as there's disclosure, there's not two titles. There's just an IOU, and an IOU is not a title. It's just a promise to repay. But if you understand the nature of money and credit and wealth, then you understand that a fractional reserve system has to be unstable because there's always the chance of insolvency.
Mm-hmm.
The bank cannot get insured because those types of risks are uninsurable, according to, say, Rothbard, Mises, Hoppe's understanding of risk. So
yes, I subscribe to that.
So you cannot insure it, and therefore, any bank is most of its assets, if it loans the depositors money out and gives IOUs to the depositors, then most of its assets are these loans, but there's a chance, that a non-zero chance that they will go bad because the people that or the lenders of the bank may not be able to repay because the things that they borrow the money for might go bankrupt. So eventually these banks will go bankrupt.
Yes.
They will have and they will necessarily be unable to repay their claims, and then there will be a run on the banks, and then everyone will realize these types of schemes are risky, and they're just
like Ponzi schemes. Yes.
Yeah, they're a Ponzi scheme, and they're doomed to failure, and they solve no real problem. This is where I just problem. So they're just not. It's not going to be, as long as there's disclosure, there's no fraud. But then to me, the real question of fractional reserve banking is, if you have full disclosure, okay, then that means the bank issues IOUs, okay, to the depositors. They're not really depositors; they're actually investors, or whatever you want to call it. They're lenders to the bank.
Gamblers.
They're lenders. So, to are called depositors or lenders, they're not defrauded if they're given full notice of the risk. And the only question is an economic question. The economic question is, can the IOUs the bank gives them serve as money substitutes? And the free bankers think they can substitute as they can function as money substitutes. And the Austrians say, the Rothbardians say they cannot. It's just an economic question. I think they can't be money substitutes because they cannot be worth as much as the underlying money they represent, because there's a risk. There's a risk of default.
Yeah.
And the risk of default is non-uniform from bank to bank, and also it can't be insured against. It's uninsurable. So it's basically an uninsurable risk. So there has to be a premium, a discount, and the discount has to vary from bank to bank. So the whole thing is pointless. So these IOUs cannot become money substitutes. So they don't.
And if you do that, you just have more of the collapse, and that is the problem about fiduciary currency that we have today, and all of this, and why they are doing it. Like why? Because human action is is purposeful, right? So why are people doing that? And all of the government and the banks and corporations have this unholy union, let's say, to make it work, to make like the impossible the impossible scheme to work. The main problem, in my view, is over lending money. Lending money is just creating money out of money in this case. Money out of nothing. So money have no value. What have value is what money can buy.
Right.
Value, I'm not saying in a subjective, marginal way. I'd say it's the real wealth is what you want to access using this this virtual wealth, which is not wealth per se. It's just access, and then you use that as a medium to extract wealth from producing individuals by using currency manipulation and all this kind of stuff. So
I agree with all that, but the thing is, in a free market system where let's say there's 100% reserve banking, Bitcoin or gold, either one, probably Bitcoin. And that, as long as there's full disclosure of this IOU practice of banks, I don't think they would be creating new money. So they just would be creating risky IOUs to people. And if they want to take that risk, they can take that risk.
Yeah, like the problem is that sounds like a virtual coin clipping to me, and I don't like the idea. Virtual coin clipping, when you take let's say a gold or silver coin, and you take out a piece, and then you try to remelt.
It's not like that.
No, I say it sounds like it's like
yeah. The real question is whether a loan agreement should be a legitimate type of contract. That's the real agreement. The real issue.
Not some kinds of loan agreements. I imagine, like, if you have a bilateral risk, it can be. It is okay, but the problem is of this kind of loans, as you say, like the IOUs on fractional reserve, you don't have the risk for the bank, like just the pot, because it's not owned by the bank.
But I mean, okay, for the Rothbardian title transfer theory, okay, for contract theory, the general issue, because loans are just one type of agreement.
No, I know.
They're not special. So the question is a transfer of a future owned resource a valid transfer? That's the real question.
I think in which way you say valid, like enforceable and binding?
Yeah, I mean, well, it's not binding, but it's just, does it have legal effect? If I transfer to you, let's just forget money for a second, because money is so corrupted by the state that's
I agree.
rocky issue. Let's just talk about a piece of gold. If I tell you, if you do this favor for me, then I transfer to you in a year an ounce of gold, if I happen to own it at that time. But I don't have any gold now, but I think I'm going to make some money. So in 1 year, I'm transferring to you the title to 1 ounce of gold that I own in 1 year. So is that, in your view, a legitimate way to transfer title to this gold? Like, if I have the gold in 1 year, does that mean now you become the owner of that gold?
Yes, I think it's enforceable as you have the gold, but if you don't have,
correct,
there's a problem. I would use
there's not a problem. There's not a problem. But I know what you mean. But there's not a problem. It's just what happens. I mean, you can only transfer.
Yes, you can use something that can only be consumed by the moment they are provided, like services. For example, I transfer to you today gold for a service tomorrow, and you cannot perform today and give me tomorrow. You need to perform tomorrow.
No.
A service can. A service is like a promise of performance, let's say.
Okay. Let's unpack that, because that's a good example. So give me the exact example you're imagining.
I pay you up front for a service.
Okay. Okay. So I'm paying now. Okay. I'm transferring the title now.
And for you to present to mow my lawn, for example, tomorrow.
Okay.
Not today, because I need to.
Well, let me ask you, first of all, why would I pay ahead of time? Why would I pay ahead of time?
Oh, just because I want to, because I will not be here tomorrow to pay you. Okay. For example.
Okay. Then the question is, when I transfer this money to you now, am I doing it conditionally or unconditionally?
You are doing it conditionally.
Okay. So who owns the gold?
In this case, you own the gold when you perform the service. If you don't, I can claim the gold back. Like the payer should.
Let's say that
ownership or possession. You are saying ownership in a way.
I'm trying to figure out both. So you're saying you own an ounce of gold,
and I pay you to mow my lawn.
Yeah, but
I need to mow my lawn tomorrow.
To mow your lawn tomorrow. Now, the moment you hand me the gold, do I own the gold, or do I just have possession?
You just have possession.
Okay, so you retain title.
I retain title. You retain possession.
So it's not conditional. The condition is, so here's the way this structured is, you're saying, I'm just handing you, possession or retention of the gold.
But you can spend it.
But I still have ownership of it. And as soon as you mowed my lawn, then the ownership converts to you. So you're making a future conditional transfer of title to the gold.
Yeah, and that is a bilateral agreement in this case.
It's not bilateral.
Why would not be?
Because there's only one title being transferred, title to the gold.
Well, but you have the expectation of service.
Hold on, it's conditional, but it's not. Look, every future transfer is conditional.
Mm-hmm.
But just because there's a condition doesn't mean that there's an exchange.
I think there is an exchange gold for services.
There's an economic exchange, but there's not a legal exchange.
Oh, okay. I get it. You are differentiating now.
Yeah,
I think that was my doubt, because why should be a legal exchange, or should not be a legal exchange when you have a economic exchange?
Because see, the way I look at it is, okay, you have to go back to basics. Praxeology is the study of human action, right? Every human action is the use of a means to achieve an end, correct?
Yes, a valid
So
goal.
when we characterize what we see people doing, their behavior, we characterize it as an action. That means we are guessing at their purpose, at what they're achieving. We don't know for sure, but we're taking a guess at the reason why they're doing what they're doing. But we know they're doing it for some reason, to achieve some end, right? So
Yes.
the reason that you transferred future title of your money to me is for some reason, but it could be any number of reasons. Let's take a simpler example. You give me a future ounce of gold, no, let's not complicate. I'm thinking of a clearly unilateral thing, like a gift. Like, let's say you give me an ounce of gold as a pure gift right now, just
because it's your birthday.
Yeah, or just to make me smile or to make me happy.
Mm-hmm.
So you're doing it for a reason. That's your
Yes.
purpose. So that's your end. Now, if you give it to me conditionally upon me performing a service, then your reason is to motivate me to perform the service.
Yes.
But it might also be to help me out because I'm your friend, or it might also be you want to spend the money on me instead of some status down the road. I mean, might have a bunch of reasons for doing what you're doing.
Or to not pay, for example, HOA fine or something like that. So yeah.
Yeah, but the point is, the fact that you have a reason or a motivation for doing what you're doing doesn't mean that it's an exchange. I mean, you can call it an exchange economically, and economically we can say that, okay, you're not doing it as a favor, you're doing it to get something back. And what you want in this case is not title to something I have, like you're not buying something from me, like my cow, but you're trying to. So you're not trying to motivate me to assign a title to you. That would be an economic and a legal exchange. You're doing it to motivate me to perform a service by the promise of, and the way you motivate me is you only give me the title if I do it. So you make the title conditional, the transfer conditional. Now, you could have done it another way. You could have given me the gold and the title to the gold, but then you could have had a second transfer saying that if I don't perform the service, then I have to give you the gold back. So in the period between when you give me the gold and when I perform the service, or when I'm supposed to perform the service, I actually own the gold and I'm free to spend it. And then if I spend it and then I don't perform the service, then I owe you some gold back, but I don't have it.
Because it's fungible. Yeah.
Well, it's not that it's fungible. It's just that I've already spent it, and so it's gone. But the point is, you know that, so you don't want to transfer it to me unconditionally. You want to transfer it, I mean, because otherwise, I won't have any money to pay you back if I don't perform. So that's how contracts work.
Yeah, I know. But at the same in the same pace, like I would not give you the gold if you do not give me a promise, for example. And I don't know if you.
Yeah, but okay, I agree with that. But the promise is it's not legal in the Rothbard system. The promise is just it's just your proof that my intention is pure and that I'm likely to perform.
Yeah,
But
and if you don't do it, you are just like you are cheating. You you are just defrauding
yeah, I
me.
could be, but not legally, but yes, I could be dishonest or I could be lying to you. But your safeguard is that you didn't transfer title to the gold to me, so you get the gold back.
Yeah, the idea that I would say, it's like I recognize promises as some kind of economic good, for example.
I wouldn't call it a good. I know what you mean. It's just one of the factors you take into account when you assess the credibility of the person you're dealing with.
Yeah, no, not yeah, promises, reputation, all this kind of stuff. It comes to mind when you want to close a
Of course,
contract.
but that plays into your motivation, which is okay. That's your personal business, but it just means you have a motivation for your actions. If for example, if you donate an ounce of gold to a charity or to let's say you donate an ounce of gold to the Mises Institute, it's a gift, but it's based upon their broadcasting by their reputation, their
And the
intention,
ideas, for example.
intention for how they will use the money, but it's not really something that they can they can breach the contract if they don't do that. You're just resting your hopes on that.
Yeah, I know that there will be a donation. That is why I asked you about can I, let's say, enforce a gift. That is why I asked you, because I don't see that as a gift, not an unilateral exchange. And the idea that you gave me about a loan, for example, I give you money in the present and then you give me money, the same money and plus some in the future, as a let's say a unilateral contract, like two unilateral contracts in the same paper, let's say. It sounds to me just like a way to circumvent this. Like I don't want to offend, but it's like something that a lawyer would tell me, you know.
Yeah, I know, but the reason is I'm trying to break it down so we can, because we're kind of having a revolution, kind of like a radical theory here. So we have to break it down. Now, I do agree that it's that these title transfers are related. They're
Yes,
not like they're not in a vacuum.
exactly. That is why I think they should not be seen as just unilateral, because like
yeah, and
if
that's
you
the
don't
by the way,
if you don't give me the money first, for example, if I take a loan from you and you don't give me the money first, why should I pay you?
well, I think in practice, most service contracts you don't pay the person ahead of time in most cases.
No,
Because
I know. For example, like let's say I make just a package. You cut my loan today, and in 10 days, for example, it's a package. I just pay double, two
yeah, but
times.
it's the same thing with employment. You have someone who's an employee; they're a regular
Yeah,
employee,
no, I know. I just say like
and
the
the deal
practice
is
I can.
it's a
I'll.
complex it's a
Yeah, it's a complex
it's a
exchange of
yeah. There's
interaction.
employment is not there's no such thing as employment. That's a legal category. Let's just call it an ongoing. It's an ongoing set of title transfers and permissions. So, for example, the employer gives permission to the employee to use the employer's facilities. Like, I can go into work and use his equipment and his office. And the conditional title transfer is if you perform labor for me 40 hours a week, I will pay you the following salary. So that's a conditional future title transfer of money. And that's an ongoing thing, right? I pay you once a month. I pay you once a day. I pay you every 2 weeks, whatever the deal is. But if the employee doesn't show up for work or does a bad job, maybe the employer doesn't pay him for the last 2 weeks of work because he didn't fulfill the conditions for the title transfer, right?
Yeah, no, I get it. Like life is just not what is on paper. I get it, but the main idea that I think it's important to say in this case is like it's like I think we are not talking about the main point anymore. Not as an offense or anything like that. It's just like my main point is the limitation, and I think the limitation about this is what is the point of having a risk-free exchange with someone that should take the risk. Like there is no way. Like what I think is when you have this fractional reserve and usury in this case, you are just getting exempt of risk because all the money you are dealing is not yours. You're just like a guy in between that is profiting from both ends in this case. That is
Wait,
what.
so are you connecting usury and fractional reserve banking together now?
I always do like did that in the beginning. Like the idea of let's go for fractional reserve. So because I think the fractional reserve is just a consequence of the extrapolation of this kind of economic activity, which is lending money. You have a problem, which is you need to have money to lend it, you know. So what do you do with fractional reserve? You create money off thin air, like you create the title, let's say.
Okay, but you don't have to in fractional reserve. That's
No,
only
no. I say in a way you take an amount of money and you just start to create the titles, and then you just give the titles as it was money.
but they're not
I don't.
titles. They're well, hold on. Why are you calling an IOU a title?
It's just like I call a title because you want the asset back. You know,
You don't
you
want
want
it back. So again, you don't want it back. You want future. That's why you have to look at the loan as a simple loan is two transfers, right? It's a transfer in the present, which is unconditional, and it's made because of another transfer being made by the borrower of a future title transfer.
Yeah, but this promise is what is being in some way exchanged in some.
Not a promise. It's not promises can't be exchanged. Look, well, let me just try one thing real quick, and then I'll let you go on, because I think you're complicating it by fractional reserve. I think we should talk about loans in general, but I think if you take an example of a non-money thing, it makes it clearer, because when you talk about a loan for money, money is fungible. So if I give you $1,000 now, I want $1,000 plus interest in the future. So people say that you're paying it back, but you're not really paying it back because the it has been spent already, right?
Exactly. That is my problem about Usury, because there is no way for you to.
Okay.
Okay.
Right.
I digress. Sorry.
But let's take an example that I think avoids that. Let's say that you want to you need a hammer as part of your new business because you don't have a hammer. And you promise me that let's say you're making screwdrivers, okay? You're going to have a factory making screwdrivers, but you don't have it yet. So I give you a hammer in exchange for a future set of screwdrivers that you're going to make someday. So I'm giving you title to a present hammer, and you're giving me a future title to 2 screwdrivers in 1 year. So there's no interest. There's just a future good being exchanged for a present good.
Yes.
Correct? Now, because there's no interest, in fact, we could do this in a barter society where there's no money. So there's no money.
Yes.
So there's no
favor economy, for example, you would say.
There's no such thing as usury. There's no way to describe this as an unfair transaction, because I give you a hammer now, you give me 2 screwdrivers in the future. Is that an enforcement?
That is not the main point that I make, because my problem is not interest per se. It's like the limitless is
No, but I just want to make sure we agree on this. Do you agree that would that be a valid contract in your view?
I think it would be a valid contract, no problem about that. But there is the risk of not being able to produce screwdrivers. For example,
of course, that's the risk of any future good. I agree with you.
Exactly. The problem is when you try to use this risk and put back into let's say the guy who took the loan. I think that is a problem, because you are taking the future, but you don't want to take the risk of the future.
Tell me what you mean? Give me who doesn't want to take the risk?
When you have the scenario that I'm explaining for usury or fractional reserve, you are trying to let's say use contracts in a way to bend the asset for you to have a riskless future. For example, I can charge you the money in the future because I lended you money that in this case I don't own, because I just holding for someone else, and then I want you to pay me back with interest. Okay, but the problem is
hold on. Let's speak for the people listening, and when I transcribe this, let's identify exactly. We're talking about, let's say, a bank and a
guy bank who saves the money in the bank, and the guy who
we have a customer who's a depositor, so-called.
Yes.
A bank, and we have a borrower, someone who's a creditor of the bank or a borrower of money from the bank.
Someone who takes the loan. Yes.
So let's say A is the customer, and A gives an ounce of gold to the bank.
To keep for him.
Well, if it's to keep, then the bank can't loan it.
Oh yeah, you have this one too.
No,
yeah, you can have this distinction too. Yes.
You have to make the distinction, because if I deposit money with the bank as a depositor, then the bank is safe keeping it. The bank doesn't own the gold. I own the gold.
Yes.
So the bank can't loan
and
it
you
out.
can
The bank
deposit
loans it out. That's theft.
Yeah, and you can deposit it as a way to take some, what is the name, interest over that this, like
if I
savings.
want interest, if I want interest, so I deposit my money with the bank, but I actually loan my money to the bank, and I lose title to the money, and the bank gives me an IOU instead. Correct? The bank gives me, as the customer, an IOU saying, I owe you 1 ounce of gold. Correct?
Yes.
And then the bank loans out 90% of it to other people, hoping to get paid back the amount loaned plus interest, and then use some of that to pay me back. Correct?
In part, because people then most of the times it's not a physical asset. It's just mostly is a digital asset. Like, say, when we're talking about money today, it's not
that's why I wanted to avoid it. Gets too complicated.
I know the problem.
Are you talking about are you talking about today's status money, the fiat system?
Status money, yes.
Okay. Well, I agree. The whole system is corrupt as it is now.
The problem that I say is corrupted because it's the whole system is made for the bank to not take the risk. So he tied the risk into the customer and the borrower, but he never takes the risk. And if it takes, it just like defaults on his obligations most of the times, or the state saves it. I know you don't agree with that, but that is the point that I'm making.
The state does what second? The state saves.
He saves the bank for for example.
Oh yeah. No, I agree.
I know you agree with that. The point that I'm making, it's like what I see is this kind of interaction on where you take them. For example, the good thing about the bank is he's both the borrower and the lender in this interaction. So he has this both sides.
Yeah, that's why it's called credit intermediation. That's the reason why. That's the reason why people deposit with banks, is because they're not good at lending to other people. So they give it to the bank loans it out, and then the customer gets a cut.
Yeah, here in Brazil, it's illegal to do that. Like, you should not lend to people. Yeah, I cannot make a private loan over here in Brazil.
Okay, even if you could make it, you're still not.
I know.
You still might want to give it to a specialist. Okay, fine.
Yeah, I know. Just like a side point. But what I'm saying is the bank does it, but in a way to limit its. He tries to take this money, these IOUs and these titles and everything, and do not have the future risk associated with that. And when it has, sometimes they default, and there is no way to take this money back. I know there is a risk for the operation. No problem about that. The problem is the whole system is made in a way that a person will not take the risk. And my question
I totally agree. Hold on, I totally agree with that. But it seems like you're criticizing.
No, my point is this avoidance of risk on which you cannot avoid. For example, as even Rothbard and Hopper agree with me. If you try to make this by contract avoidable risk, you have like a null contract, in my opinion. You just froze. Oh, did you hear me?
Yeah, I think we both faded for a minute, but I think so. Go ahead. So you said that.
Yeah, the point, like that is my point. Like, you agree with me that you cannot like divorce the future asset from the risk. And it's this kind of operation has a intrinsic risk that cannot be secured. I think insurable, if I'm not mistaken. That I said, like, I know this literature, but I read in Portuguese, so sometimes the words get scrambled. But yeah, what I'm saying is, like, if you make a contract on which you try to describe in a way that you divorce that, this contract does not make any rational sense.
I don't disagree, but I guess I agree that, but this is just another way of explaining what's wrong with the current system.
No,
There's lots of
the problem is that what I want to point out with this questioning line of questioning is, as I'm not like a well-spoken, I'm not that well-spoken in English, I'm just trying to use some Socratic method, is like, shouldn't you agree with me that this risk-free is risk-free in this case, because it's just like it's just a legal manipulation, let's say a contractual manipulation, it should not be valid, because it's that is my point. This kind of contracts cannot be contracts.
Hold on, but for a lot of reasons. I mean, basically it's not risk-free, it's just that the government is the lender of last resort. And so we're creating what's called a moral hazard, correct? And so
exactly.
Yeah, I totally agree. This is the problem with the whole system of deposit insurance.
I just we just took like the main problem and one that we both agree. That then I would just want to boil down to this characteristic, like should I be able to loan you money and giving you all the risks of your future payment? It does not make sense.
Do you mean should you be able to do it in today's system or in
in a private system? That is my question.
So let's talk about it. In a private system, yes, I think you should be able to do anything that's not fraudulent. So as long as
it's not real, I know, in my sense. It's like when I borrow, I give you the money and I take your future, let's say your IOU, there is a risk against this IOU, right? You cannot.
But hold on. I thought you said you read Doug French's book and you agreed with the legitimacy of a loan secured by an asset. So the guy lending money to the borrower is taking the risk that he might not be able to be repaid, and the asset might not be enough to pay him back. He's taking the risk.
What I'm telling you is like because you can then walk free, but if you just put the risk back into the guy who took the money, then you have a problem, because first I think this contract is invalid, but I do not have like a strong argument over that. I think that's not seen as like a rational contract, as justifiable demand. The second part is when you have this kind of structure, you create a moral hazard for people to exploit that for expropriation and slavery. Because
okay, okay, hold on. I think so. The problem. Let's talk about these issues one at a time, because you're mixing several things together. If one of your objections is this inalienability argument, we can talk about that. But I think most contracts where there's a future payment, a future title to something, don't always involve a type of slavery. It just involves.
No, I'm not saying it does. I'm saying like when you try to use a contract as a resource to take the risk and put it back to the borrower, the risk of his future payment, then you have a problem here, because where is the limit for this? That is why I go back to the alienability.
Let's talk about a real world example. So let's imagine there's no state, there's no central bank, there's no fiat money, there's only sound money.
Not real world, but okay. Like there is a state, there is, but no, just joking. But
I know, but I already agree that in today's system, that the whole banking system creates moral hazards, and everything about it is unjust. The fact that
I know I'm not like attacking you, saying like you are a bank lover or something like that. I'm just saying I think this structure is it's intimately tied with this idea that I'm poking about, that I call usury.
I get it, but you keep saying there's a problem, and that's fine that you sense a problem, but to identify something that's a violation of rights in a libertarian sense, you have to identify some kind of violation of someone's rights. And so the fact that some people organize their affairs so that the risk is moved from one person to the other, in a way, is none of your fucking business. Do you know what I mean? It's like, if people want to do it,
but murder is not my fucking business too. Like you can murder your wife.
Murder violates.
I know, I get it, but it's not my business. But why should I have a stake on what you're doing to your wife? For example?
No. What I mean is, if you can identify someone's rights being violated, that's
yes,
fine.
that is what I'm trying to do.
Okay, so let's take a.
I say it's like what I'm saying about comparing to murder. Like if I can prove that is a violation,
yeah,
does not. I don't care if it's a private matter. For example, you killing your wife or you hitting your wife.
totally agree. I
You
agree,
know,
but most
it's just
contracts
not because it's a private matter that it's like enshrined. That is my point.
I totally agree, but a contract is usually between two people,
Yes.
and if there's disclosure and there's no fraud, then their rights are not being violated. And then the question is, how does it affect other third parties, and does it violate their rights? So, for example, in the Rothbardian literature on this by Hoppe and others,
yes,
they have two criticisms of fractional reserve banking. One is the criticism I would agree with, that economically it makes no sense and it just wouldn't merge absent state support of it. The other argument is that it's some kind of fraud, or it causes inflation, or it's a duplication.
externalities, because
So,
it's distortions in the economic. Yeah.
but then they're saying that has an effect on other people, but I think that's actually not true, because so the way I look at it is, in a free system, there would be banking would have two different functions. I don't think it would be the same thing. You would have warehousing, right, which is the safeguarding of funds owned by depositors.
And gambling, let's say, which you just make a
No. I'm not even talking about. I'm talking about the two legitimate functions in a free market. One would be warehousing of deposited funds, right?
No problem about that.
In that case, I do believe that, for efficiency reasons, not with Bitcoin, but with gold, for efficiency reasons, it would make sense for the bank to commingle the funds, so that, because they're fungible and it's cheaper to, instead of having everyone have safety deposit boxes,
you put in one big box.
yeah, that's called irregular versus regular deposits in the Roman law, which Huerta de Soto talks about, correct?
Yes, I know it.
And
I did not exchange mail with him about that yet, but I'm planning to. I already
and that's in like chapters 1 and 2 of his book.
Theory of money credit. That's sorry, no. I have the book over here. It's a big book like this.
Money, banking cycles. And
it's a really good book I have over here. I will not take it because I don't want to take it out.
And so basically, in a free society, we could imagine.
I have over here. One second. It was nearby my typewriter. This book over here, I just have in Portuguese. There is a problem. Yeah. So I get a bit scrambled, but yeah, it's currency, banker credit, and economic cycles. This one.
Yeah. And I actually think he goes too far, but that's a different issue, because he's like the Hop. He wants to go too far and he wants to outlaw it. But I understand why. But I think his first paradigm is correct. That the way to look at this is that there's nothing wrong with having a depository institution hold the funds of depositors and commingle them, but then every depositor has a pro rata ownership interest in the deposited funds. Correct?
Sorry, what is the word? It's a Latin word. Pro
rata. Pro rata.
Pro rata. It's separate. In proportion. Okay, for the ratio.
Yeah, so if the bank has 1 million ounces of gold, then
I have a portion of this gold. Yeah.
I don't own a particular piece of gold, but I own that fraction of gold that the bank has, and because they have 100% reserves, there's no risk of default. Or
they can, only if you get robbed. In this case.
Or they could have insurance. The bank could have insurance for that, because that's an insurable risk.
Yes.
Now, by the way, for Bitcoin, I think that the need for such a function is much lower in Bitcoin. You can have your own coins, or you can have Coinbase store it, and it's much cheaper. So and Coinbase theoretically could segregate each deposit. They don't need to be commingled. I mean, maybe they could be, but maybe they are, but they don't.
Bitcoin is not something. It's not. What is the word you said about the commingled and non-commingled? It's like Bitcoin is not a piece of gold, for example. I want this piece of gold locked away. No, it's just like a number. No.
But in principle, I could. So I might have like 2 Bitcoins right now, and I keep them on my Trezor, correct? but I could give it to a depository company to hold it for me, and I may pay them a little fee, but it's still a particular Bitcoin unit. But
There
I'm
is,
paying a
yeah,
fee.
I know what you're saying, but like Bitcoin is not a particular unit; it's just a balance. There is no like a Bitcoin number and a serial number for the Bitcoin. It's just a
Well,
balance.
every Satoshi is identifiable.
No, well, it's trackable, but not identifiable in a. There is no, let's say, serial number in this way.
Well, well, I don't know the detail.
All the Bitcoin is pro rata in this way.
Well,
There is a point.
it might be, but there still would be a distinction conceptually and functionally between me commingling my Bitcoin in a big account that Coinbase holds for the customers, and me having my identifiable and segregated some kind of way.
Yeah, like you can put everything in one wallet or have many wallets. Yeah,
But
you can do
but
that.
my point is, with banking as it exists now for gold, they're vastly different because the cost of an individual safety deposit box is greater than the commingling, which is why we do regular deposits instead of irregular, or sorry, vice versa. We do regular
Yes,
deposits.
yes.
But with Bitcoin, it might not make a difference. I don't know. But the point is, you can
Yeah,
see
it's
that
just a way for you to use the what is the name, the wallet. But Bitcoin by itself is not. It's
in any
not
case,
something. Yeah.
if I hire a company to hold my Bitcoin for me, whether it's the regular or irregular deposit is just a detail. The point is that function might exist in a free market, but it would still be a lot cheaper and easier than for gold, correct?
Yes, I agree.
Okay. But that function is, I don't know if you call it banking or what. It's called, let's just call it depository function, like warehousing function. Now, you could also see the need for credit and credit intermediation on a free market where you have a bank which receives deposits, but they're not deposits, they're actually loans from customers, and they want to get interest. So they're using the bank as credit intermediation. And they get IOUs in exchange. They don't have title to their Bitcoin, they have an IOU for their Bitcoin, right?
Yes.
And then the bank loans most of the Bitcoins that it receives to other customers, hoping to make an interest, correct?
Yeah, but there is a moral hazard over there. For example, in my opinion, you are the one who chooses which loan you make, and you don't have your risk assessment is to push the risk outside of the bank,
Okay.
the
So
institution.
that means that if that I'm stupid if I loan my money to a bank, in your opinion.
I will not say
But
properly that, but it's like the bank does not have, let's say, properly incentive to be responsible with your money. They can help you, like they can give you money, but in the end, it's
okay.
unstable.
Well, that just means that the institution of credit intermediation would not work on a free market. I don't think that's true, but you might be
I
right.
think it will work, but in a not in a premium, but in a discount. For example, what we call factoring and security here in Brazil. We have the factor, for example, for checks. Checks is a future payment order, you know. And when you have a check, like you present a check to the bank, and the bank give you the face value of the check. What happens? Some people want the money now and not in 60 days, so they exchange the check for a discount over its face value. For example,
Of course, but yeah, but you're using the current system as an example, but we were talking
but
about
you can do that in a free market, no problem. People did
okay.
that even before
Well, hold on. So
the modern
that's the
system.
question. Okay, so then the question of what's called money substitutes arises, right? So in a free market system, money would be, let's say Bitcoin would be money, okay? Now the
Yeah,
question is if
I do not agree with that, but okay, let's exercise it.
why not? Why don't you agree with that?
I don't like the problem about Bitcoin becoming money, in my opinion, is we need to have it's one of two. I already made a video about that. Or Bitcoin destroys the legacy, and then we have a fundamentally different economic system, or it gets absorbed. So we have some kind of gold system, gold standard back, but a digital gold standard back, but it's we do not solve the main problems about fractional reserves and stuff,
Okay,
which
well,
was the main idea.
I mean, I don't know what system you're talking about then, because you're talking about the current system, you're talking about a future system that is not
if
Bitcoin,
Bitcoin,
hybrid
if
system.
if Bitcoin becomes money, and let's say the dollar gets down or gets absorbed by the Bitcoin, two things should happen in this way. Or Bitcoin gets triumphant in its principles. For example, there is no more fractional reserve, fiat money, and stuff like that, and Bitcoin is fundamentally change the legacy system, or it gets absorbed, and in the second, third layer, it starts to get printed. And there are a lot of people from Monero who already made this critic.
Okay, you just tell me what system you want to talk about. Tell me what the money is in this free market system you're looking.
I'll go for gold. Gold is safe.
Okay, so we have a future money. We have a future system where gold is now money yet again, correct?
Yeah, we can go with it.
So now there would be definitely a need for warehousing of gold. So you would have the warehousing function that Huerta de Soto describes, where I keep my gold in a local depository bank. But the contract is I own the gold. The bank doesn't own the gold, correct?
Yes, and if it uses for loans, it's wrong.
It would be theft. Okay, so there's no problem there. And there might also be the need for credit intermediation, where instead of me loaning my Bitcoin to someone else to make a return,
your gold, but yeah,
gold. Sorry. So, well, let's take a. Do you think that in this future society, it should be legal for me to loan my to you?
I don't think like loaning is illegal per se, but the problem is the limits of loaning. And
hold on. I'm gonna go inside. I'm gonna go back inside. My Wi-Fi keeps breaking. I'm gonna have to stop smoking. Hold on. Come on, Bella. I'm gonna move inside. Hold on. I gotta finish this inside.
No problem. Just
I'm gonna have better
relocate.
Wi-Fi. Okay, let's. So in this future gold money society, we have some need for people to use warehousing to store their gold. Correct?
Yes, and people can loan gold, no problem. What I'm telling, there is a fundamental difference between factoring and securing a gold check. Let's say, for example, I have
Hold on. Let's not
here.
get the check. You're complicating with checks. Checks is a whole different issue. I don't even know if there would be such a thing as checks in such a world, because checks is a status sort of doctrine in a way. Negotiable instruments. This whole idea. I think
checks they got created by the Templars, if I'm not mistaken.
Well, I want to start from scratch and make sure everything is compatible with libertarian principles. I mean, I don't know if checks. It depends on what you mean by checks, right? You should look up the concept of negotiability, which I think may be a status doctrine, which would only work. Negotiability is an important concept of what's called commercial paper. Checks are just one type of commercial paper. Okay.
Yeah, that is what I'm talking about.
But those rely in modern law on the concept of negotiability, and I'm not sure that's actually something that's not people haven't given enough attention to that as libertarians, because libertarians tend to take for granted all these institutions that have arisen, like for example, like they take fractional reserve banking for granted. They take the practice of you getting paid interest for what they call a deposit, and they call you a depositor. They take that for granted, but we're saying all that is fraudulent and creates a moral hazard. I agree with you on that. But by the same token, I think there may be something with the very concept of negotiability. I've only written on this a little bit, but negotiability means, for example, that the check is valid even if there's fraud in between. Anyway, it's a complicated thing. Do you know what I'm talking about a little bit with negotiation?
Yes, yeah, we had this discussion here in Brazil for some time about like if there is a robber in the middle, we call is the robber in the middle problem.
But the reason the bank, I believe what's happened is the banking system and the state's legal system, they want the commercial practices that are built around the state monopolization of the banking industry and fractional reserve. They want that to work. So they say
But
that,
it's impossible to work, so they try to bend reality. Yeah.
yeah. So what they say is so if I write it, if I have an account at a bank where I have money in there, I can write a check to you that is that gives you permission to go to my bank, and it says Kinsella is I forget the term, drawer or drawee of the same. Anyway, I give a check to you, and that means you can present it to my bank, and they will pay you on my order, right?
Yes, in your behalf. Yeah.
But the government, to make that piece of paper basically like legal tender, so that you can instead of going to the bank, you can give it to another party. You can endorse the check over to another party, and they can
Yes.
endorse that check over to another party. And down the chain, the government wants that final person to be able to rely upon the original promise, so they can take it to the bank and get the money out. So they invented this doctrine of negotiability, which blesses this as like this legally special binding document. Whereas in normal libertarian property title theory, I believe, if there's a guy in the middle that makes up the check, then there's no, actually, I got this a little bit, I'm simplifying it a little too much. What it says is, if the original guy that writes a check has a defense, like a contract defense saying, "Oh, I want to stop the check because the guy I'm paying didn't perform the service." Once you send that check out, you can't stop it anymore. You can't
Yes.
raise the defense. Now, if the check is totally fraudulent, then the check is not good because I didn't write the check. That's a whole different issue.
Mm-hmm.
My point is, I'm not sure if we can rely. So I think the concept of but anyway, the problem with checks now is that an issue they're an order to the bank to give the person I wrote the check to permission to get some of my money out of the bank. But the problem is, it's not my money in the first place because I turned the title over to the bank. What I'm really doing is giving a promissory note to you. I'm not giving
Yes.
title to you because the system has corrupted these things.
Yeah. Like back in if I'm not mistaken, uh, in the before the banking system, like the modern banking system, the checks is like the holder of the check has against the check was emitted by the bank against itself.
Yeah.
So like you deposit the gold, let's say in Rome, then you go to Jerusalem, then you present the check and take your gold back minus a fee, right? You get a fee subtracted by the service, the service cost for ferrying the gold and stuff like that. What happened then? We just make the check into a personal. We just personalize the check. Like instead of being an institution, the institution became the intermediary for this checking system. But the checking in general is not the problem. The problem is the institutionalization on which you create these openings for fraud and these systematic openings, you know. But
Okay,
yeah,
but if we take our imaginary world where the central bank is gone, there's no fiat money, and there's gold. Okay, so there would be one role for warehousing. Those could not play any role in expanding the money supply and fraud because they just hold the money, correct?
yes, a holding company, let's say.
Now, if I have a Bitcoin and you have a business and you want to start a business, um, and you don't have any capital to start your little business, there's two ways I could help you. Number one, I could give you the money and take an ownership interest in your business, right? That's one way to do it.
Like investor, yes.
I'm an investor, I become a shareholder, and you give me 10% of your company, and I give you 1 ounce of gold.
And if the company go default, tough luck. Like
Correct.
if
And if the company makes a lot of money, I have 10%.
you had 10%, yeah,
I
you
get
are
10% of the profits. That's a normal business, right?
yeah, you are betting on my idea and my capabilities in this
Now,
case.
I know that Safety Moose and other people are hostile to the concept of credit, which I am too a little bit, but not as a
Mm.
libertarian. They think that the institution of loaning would almost disappear in a Bitcoin world, which I kind
I
of,
exchanged some messages with Amuz and saw his lectures. It was
well,
really
and
interesting.
part of it is because he's trying to justify this usury thing that the Muslims have, but I think, and this hostility towards
Mhm.
banking, and I do think that the whole concept of credit would be radically changed in a Bitcoin or a gold world. So, for
A
example,
non-fiduciary world in this case.
yeah, time preference would change. So maybe no one would like, I wouldn't buy a house with a mortgage. I would just save money, rent an apartment and save money. Gold, I would save gold. And when I have enough gold, I just buy a house with cash. Okay. Or buy a car with cash.
Hmm.
Maybe that's the new world. I don't know. But the point is, and maybe I won't loan money to you for your business. I would take it an ownership interest in your business. But I think there still might be a role for me to say, okay, instead of taking an interest in your company, I'm going to loan you 5 ounces of gold for your business, and you promise to repay me 5 ounces of gold in the future with interest. Do you have a
Yeah.
do you have a problem with that?
Um, I don't have a problem with that. The problem is, what if you can't pay?
Well, so that there's two ways you can do it. It could be unsecured or it could be secured.
Yeah, I think the unsecured is where is what I see as the problem. Let's say because
No,
if it's
but no, but you know, but you said you like Doug French's idea of walk away, which means it's
yeah, the problem is I think when it's not like you have let's say you have you give me this loan and you put a lien, I think is the name. We call in Portuguese gravame. You
yeah,
put a lien against my house, so I
yeah,
cannot sell my house without communicating you and you approving that
yeah.
because it's giving as a security. If I'm not mistaken, that would be the name. Um, this kind of loan is okay because if I don't pay you, you can enforce against my house, no problem. If I don't give anything for you to put a lien on, uh, and then I don't pay you, you have only, let's say, two options. You need to go against my alienable goods, for example, my house in any way, but you cannot take against someone who already has a lien against it, because then you're gonna be aggressing against the other guy, you know. And if I don't have anything else, because I'm bankrupt, I have more debt and liened goods than available goods for you to liquidate. Then I just go bankrupt and you cannot collect. That is the point that I think.
You can't connect. You can't collect now, but you might be able to collect in the
In
future.
the future, yeah, but the problem I need to be able to produce enough in the future, but I
Yeah,
can just not produce.
yeah, that just means that it's possible that you can never. Maybe my loan is a bad investment. I mean, it's a bad.
Yes, exactly. The problem that I say is like if you try to get out of this risk, for example, say no, you become my slave, or I have a lien against I don't know, your children should pay me, and then or something like that. It's not a possible contract because you have this risk that you cannot avoid.
Well,
You know,
first of all,
I
you
know
could.
you cannot put against the children. I just
No, no, no.
giving the
But
example.
yeah, so that's not. But there's no way to get rid of risk. Any time that
That
you.
is my point.
Yeah, but it's impossible to get.
And
Any.
if you make a contract on which there is something possible, this contract does not have any sense. Does
I
not
know,
make
but
sense.
you're thinking of contracts in the standard way as a contract is a binding obligation that is like enforceable or not. But again, the Rothbard, I don't know if you agree with exactly with the Rothbard title transfer theory of
I have
contract.
some problems with Rothbard, but like I think it's mostly right. But as Rothbard just wrote a lot of stuff and changed his mind after, for
I
example.
agree. That's why I took the part that
Mhm.
made sense and I expanded in my most recent article. I think that's the best way to frame the.
I really liked your book about this. Like after I read it on the chapter 6 or 9, I don't remember now,
Chapter
about
9.
alienability. Yeah, I just reformulated my argument because I was trying to use the idea of consideration, and I was like, okay, alienability is way better, it's way more
Right.
solid. Yeah.
Right. But however, I wrote another chapter since then, which is going to be in a book that David Howden is editing, which is coming out later, but it's already on my website. So it's like that chapter 9, but it's got some, I think it's got some clarifications and improvements. And that's kind of my main, it's on my website. It's called The Title Transfer Theory of Contract. So that's the
Mhm.
really one I point people to now, because that one has explicit identification of where Rothbard kind of went wrong and how this theory flows from libertarian property rights theory and contracts. That's my current view of these things. Now, but the point is, you don't view contracts as binding obligations. So when you say it's an impossible contract, that's more of a reason for courts not to enforce contracts now, because they view them as binding obligations, and so they're going to scrutinize these things. If you just view it as an alienation of title to a future thing, then either you have a sufficient communication of your consent to do that, or you don't.
Yeah, but my point is, I agree with that in the condition that is alienable.
I agree, and so you can't
The
alienate.
problem that I'm
You
saying
cannot
is like
alienate your
we are
body.
constructing contracts alienating something that you couldn't. Not that you shouldn't, but is
Like
not
what?
alienable.
Like what? Like what?
For example, if I make not saying that we are doing, but like the theory is allowing in some way. For example, slavery is a slavery contract because we
I
have
agree. You
what
can't.
what
I agree.
the thing.
You cannot alienate your body. I agree with that. You can only
Yeah,
alienate
like
things that you
so you
own.
agree with me if I make a contract with you that alienate my body, this contract does not matter if it's I'm informed and consent. It's not a contract.
Um, Well, a contract is just the word we use to describe two
It's not
things.
a valid agreement. It's just a, let's say, a word play. It's like when Hoppe says about a master arguing with its slave,
A
you
little
know.
bit like that. Yeah. So if I say I promise to be your slave, or if I say I hereby give my body to you, it's
Mhm.
just not a valid contract because it's not an alienation of title to my body. Those words don't alienate title to my body. I agree with you.
Exactly. No, the
I agree.
problem that I'm saying is like some contracts, some written documents are doing it, but like that is my main point. But in let's say in pernicious, tacit, not so open way. But it's not like not so open because the guy is conspiring to enslave you. But it's
Yeah,
like
yeah, yeah.
this is the main idea. It's just
No, no,
like,
no.
that is how
I
we
agree.
do it. You know.
I know, but the reason I started this and I mentioned bankruptcy and inalienability is I sense that this is where you're going with this. Now,
Hmm.
I will concede that there is I haven't written in detail on this. I do have a couple of footnotes where I say that there could be an argument where the inalienability of your body is effectively being alienated if your title transfer is so extensive that it impoverishes you so much that you're basically
Yeah,
enslaved.
you cannot. Yeah,
But
or you die by starvation because you cannot
well,
put food in
right.
your
So
mouth
like
because you should be expropriated.
exactly. And I mentioned that. So there could be a limit. I think there could be a limit, but
Hmm.
that's a different limit than the usury limit. And that's a different limit than this limit of trying to shift the risk. These are all different considerations. And by the way, I think that
I
in the
agree they are different, but I think they just regress to the same point. Because
maybe
if you try to
maybe
shift the risk, you are trying to enforce a contract that you are like the risk is not dissociable for the operation that you are making. But if you write the contract on which you are trying to enforce in this way, it's not valid. It's not. That
well,
is why.
it's well, I don't know if it's valid now, but so here's the question. If I say, listen, let's take our previous simple example. I give you my hammer now, and you give me two future screwdrivers. Now,
Mm-hmm.
I think in general, the legal system of a free society should recognize that as a valid way of assigning title to the future screwdrivers. In general.
Yes, if the screwdrivers exist. The problem
Now,
is when they don't exist.
no, no. So let's take this. So now let's say I go to get the screwdrivers from you, but that's all you own in the whole world, right? Like all you own is these
Mhm.
two screwdrivers, and you're bankrupt otherwise. and you say, well, I should keep ownership of these screwdrivers because if you take them from me now, that's turning me into a bankrupt person and I can't survive.
No, the bankruptcy is not the problem in my vision. It's like, for example, I just have one screwdriver, let's say. Then I give you one. This is the only one I have, and you want to take another stuff that you
It's
should
not that I
not.
want to take it, it's that you agreed to that. So when I gave you my hammer, you agreed to give me 2 future screwdrivers and you
Yeah,
agreed to give
but I
me
cannot agree to give you my body.
no, but you can agree to give me 3 screwdrivers.
Yeah, 3, 4, infinite.
No,
And
but
well, infinite no,
you
but
could
yeah.
hold on. You could agree to say, listen, in 1 year, I will give you 2 screwdrivers. If I
Mhm.
don't have the screwdrivers then I will give you future screwdrivers equal to interest, basically.
Yeah, in a proportion, yes.
Yeah. So, but those are all conditional and they're all, but they're determinable, identifiable things,
Yes, but they are empty. They don't have any security against it.
which is why I think that in some cases, the lender would say, okay, I'm going to go after you for 10 years, but after that, I'm going to write it off.
Yeah, like I think my point is you cannot enforce it, and there is a really it's complicated thing. Like, it's not that I say every contract should be enforceable, but if you have a wrongful alienation, you just want to reverse it, but not enforce it. For example, as the hammer is not a consumable good, you should be able to just retract the agreement. Instead of screwdrivers, you just give
But yeah,
back the.
hold on. But that's possible. But maybe the hammer is consumable. Maybe the hammer's
No,
maybe.
I know the nails would be consumable in this example, but what I'm telling is, if you have like an invalid contract, for example, you take me as a slave, for example, and I do a lot of work for you and stuff, but then for some mistake I break something, and you want to punish me, and I said I don't want to be a slave anymore. I changed my mind. You're gonna say, no, you are my slave and you need to stay here and you need to pay for everything. Like, you cannot agree with that. You
I
cannot.
agree. I agree. That's my whole argument is that inalienability is a thing, and that's why I disagree with Walter Block. I agree with you.
Yes, and in this point I agree with you, but what I see is like, what do we have when you have this kind of interests and, um, let's say, impossible to fulfill agreements. You have the same problem, but in just a whole new package.
Yeah, but so what would happen in reality is people that have an expectation of getting a future payment somehow, they would factor into account the reality of what they can enforce. And they if
Yes,
they're depending upon your body performing a service, they know that they can't enslave you. So they're gonna base their contract upon conditional future title transfers.
and you need to have this risk, or
Of course,
write
but
risk
that's the
over
point.
asset. Yes,
Every contract that depends upon getting paid from a future thing is always inherently necessarily risky because the future is uncertain.
I agree, but the problem that I'm telling you is, like, if I make a contract with you that I just try to avoid this risk, the mind risk, to
I don't know what you
put it
mean.
into you.
What do you mean by try to avoid? I don't know what that means.
When I say that I try to avoid, is like, if I written in a contract, if I make a legal agreement with you, that I try to write off my risk onto you.
I don't know what that means to write it off.
um as I said, if you default, I still can go against everything that you have, even your body. Like, does not
No,
make
you
sense.
can't. No, you can't go after their body. It can only be against alienable things.
Exactly. So I always have this risk, and if I try to say that I don't, like, the contract is being fundamented in
No, wait,
something
hold
that
on
it
a second.
isn't,
Hold on a second. Even if slavery agreements were enforceable, there's still a
which
risk.
they aren't.
There's still a risk. Even if I could enslave you.
Yes, I can die. I can get
Right.
a disease. I
Right.
know.
So every time I'm counting on a future performance of a service or the future
Yes, you
title
have
to
the
a good.
risk.
There's always a risk. The future is
Yes,
uncertain. I agree.
in the reality, you have the risk. What I'm saying is like you can put on paper that you don't have, and you expect then something else or something else or something else, and you
No, but
can.
that just means that when I do a commercial deal, I'm trying to minimize my risk. There's nothing wrong with trying to minimize
No,
risk.
nothing wrong trying to minimize. So, but sometimes you want to let's extinguish something that cannot be extinguished. Like you want to alienate your own risk against someone else. That is what I'm thinking is a bit absurd about the modern banking system, because it's that the modern banking system, the fractional reserve, all this kind of stuff is just a way to try to make it so. And I think that there is like Hopper even talks about that in the Brief History of Man, which is not a economic book in the same sense, but the concept of the primordial sin of humanity that he says about security getting corrupted into a state, and you can have a monetary the monetary system or the credit system to be corrupted into a fiduciary system or what I would call a usury system. It's possible, like just because in history we had the problem over justice and justice and what is the name and security, like armed forces in this case, does not mean that the state could arise for other reasons too. And that is one of the points that I want to throw some light over.
Well, let me suggest something. One of my friends, two of my friends, Jeff Barr, they know Doug very well, by the way. Jeff Barr, he's an attorney in Las Vegas, and Lee Iglodi, who's another attorney in Las Vegas, and Doug to some extent. They've all been talking for years about their opposition. Not only they agree with, I think, Hoppe. Well, some of them agree with.
It's chopping a bit, your internet.
Damn, I'm inside. I don't know what I can do. Let me, how about now?
Yeah, it's now it's a bit better. Please continue. Your friend Jeff Barr and
Yeah, and Leah Glody and Doug French, they oppose the concept of corporations because they think corporations with limited liability give rise basically to the business cycle because they cause they separate ownership from control. And again, the corporations, the investors in corporations are trying to have their cake and eat it too, in a sense, right?
yeah, that happens on trust systems. If that makes sense.
And so they think that um, I forgot where I was going with this, but there's a connection to this idea of trying to eliminate risk by pushing it onto other parties. And in the case of corporations, you could make some argument for that because there's third parties that could be harmed by acts of the corporation, and then they can't pursue the shareholders. So I think there's something wrong with there's some
Yes,
problem.
I totally agree with that. Thank you very much for this lead. I need to take the names now.
Yeah, well, they haven't written.
That is my, like I had this conclusion last week. That is I had like it's a proto conclusion for in my side, but that is like the logical conclusion of my point. Like corporations should not exist.
They haven't written much. They've been planning this for 10 years, so they haven't done it yet, but I'll send you their email and you can talk to them
Oh,
about it.
please do it.
But I've written, and they disagree. Like I've written in defense of the corporation because I think that ultimately the corporation could be constructed by contract alone. And anyway, it's a whole different argument. But um, I just think ultimately the issue is when you have a conditional future transfer of title, it should generally be effective. That's all. And I think what you're sensing is that you can use that reductionist view to use lawyer tricks to help people do something that they shouldn't be doing, right? But
Yeah, not going against the lawyers in general.
Yeah. No, I know. But it could be too
yeah,
clever. Yeah, it could be too clever, and it could be obscuring the reality.
is a systematic exploitation because you make the system in a reductionist way, and then you have like this gap that people use the exploit as a feature.
Yeah, and so Sean Gabb has written on this himself, and some people in England they oppose corporations for this thing. They think you shouldn't separate. Like if you're going to invest in a corporation, you should be on the hook, and you should have control, and you should have responsibility and liability for everything they do. And I think sometimes there's a leftist impulse there, like they think that this would keep giant corporations from existing in the first place, because if everyone's going to have liability, they wouldn't invest in it. So maybe they'd all be smaller. That's all fine. I don't know, but what the world would look like in a free society. But I don't think we should engineer shareholder liability to come up with the outcome that we want, which is smaller corporations and instead of large ones.
Yeah, I'm not for the outcome. Like
Yeah,
I
yeah,
want a fair system. That is the point.
yeah.
So yeah, if that means that we have no corporations and billionaires, no problem. If that
Right,
means that no, everyone become a billionaire, no
right.
problem too.
Yeah. That's my view too. That's my view too.
Yeah.
Um, anyway, I forgot what, but I wanted to mention that too because I think it ties in here to some degree.
Yes, it ties perfectly. That it's like it's this kind of discussion that I want to foment inside of the libertarian circles. But I didn't even knew that people are talking about that because here in Brazil we don't have this, or we don't have in the same way trust. You know, when you make a trust in your and I become the trustee, and then you have some assets inside the trust, and I control them. We don't have that.
Yeah,
That is a illegal activity over here. And when I start to discover about it, I have thousands of pages in my computer about this and how to set it up and how to do it. And when I start to go, like I want to open one for myself, I just get like dead in the tracks. Like, wait, this thing can protect me against the state, against the expropriation of the state, everything, but it can protect me against lawful expropriation in a free market too. Let's say in a fair expropriation for someone that I wronged, I can get not be expropriated by that. So that does not make any sense to be like so to be defended in a libertarian society like in this way, because it's configured to be a defense against the state, and it opens up to be a defense against everything.
So in these loan agreements, and now I think I remember the connections because the bank is acting like they're taking money from depositors and they're loaning money to creditors, but the bank in a sense has no liability because in the end they can just go bankrupt and walk away, right?
yeah, and walk away. The bank can walk away. I
But
can't, and
the
you
question is,
can't.
so if you say because of this systematic risk that's generated by this system, and you think there's a problem with it, whose rights is the bank violating? Is it the rights of the depositor or the rights of the borrowers?
I think it's both, but not in
Okay,
the same way.
so if I borrow money from the bank, I shouldn't have to pay it back because I've been cheated.
There is a problem that I was talking, because if I don't pay back, the bank cannot pay the deposit back. But if like I keep playing the game, the bank can just start to take more money and make a even bigger problem. So there is a what I call a Kaczynski trap. On I don't know if you're familiar with Ted Kaczynski, the Una bomber.
Oh yeah.
The Una bomber said like, well, we need to stop. I do not agree with him. I just say that is the Kaczynski trap, because then you just start to go, you start to become a accelerationist or a revolutionary, and I'm not. On which they say like, well, the modern society is so bad and so bad that it's justifiable for me to blow up people to warn about the problem. So would it be justifiable? Like that is a Kaczynski trap in the way. I don't know the answer for that, but if
Well,
people start,
yeah, let's take the banking system for example. I agree there's a moral hazard now because the bank I will say they can't go bankrupt, but they can be bailed. They know they can be bailed out by the government because of deposit insurance, correct?
Yeah, and the shareholders are untouchable in some
Correct.
way.
Well, the shareholders are, yeah, but again, so this ties into the other thing,
Hmm.
limited liability. But
And
if
I think the problem is not on limited liability by itself. It is like put limited liability down, but the problem is the exploitation of this concept. I think it's the problem. We are reducing everything, and
yeah,
then you open up for these errors, and the state does not care. Why? Because it
that's
can.
why you want a holistic approach and not to reduce things to their individual parts so you can get away with it. You want to say, no, look at what's really going on here.
Yeah, and if I just keep reducing every time, or we start by a limited framework, then lawyers can just go in and just
Yeah.
destroy
But the way
everything.
but the way I see it is
I know
libertarian.
you are a lawyer, but I'm not trying to
No,
dig against it.
I understand, but the way I look at it as libertarian thinkers, we can say, listen, we can reduce it so we can analyze the separate parts and
Yeah,
we can identify where the problem is. And the
that is why I
problem,
say the problem is not on interest itself, not in
right.
limited liability on itself, not in banking itself. Like there is another problem, but we cannot even. It's hard to define. It's hard
No, but it's not. I think you can identify the problem is two things. Number one,
No, the when I say define is like it's hard to put a name on it. We don't have a word for it.
well, I think that the word is so
We
um
can describe the symptoms, the
well
effects, and but not.
one problem is that a bank gets to treat customers as depositors and as lenders at the same time. So that's a problem with the state's legal system.
Mm-hmm.
And the state's courts went along with this to permit the government to have fractional reserve banking, right? Number two, the other problem is the government is there as a lender of is to bail out the depositors and the bank through deposit insurance. So deposit insurance clearly is a violation of libertarian rights because it's essentially taking money from taxpayers and giving it to the depositors. I'm sorry, the shareholders and to the bank, right? Or to the
Yeah.
or to the
Saving the bank is always wrong. No problem about that. That is not.
so we can identify. So if we got rid of deposit insurance, for example, then because we believe in Austrian theory, we believe that the fractional reserve bankers are wrong. The free bankers are wrong.
Mm-hmm.
That they think that a FRB system, a free banking system, would be stable. We think they're wrong. We think it would not be
No,
stable,
it would collapse.
which means that there would be bank runs and there would be no government to bail them out. And soon people would learn that it's a very risky thing to put your money in these things, and the practice would die away. It wouldn't be
Yeah,
a problem.
yeah. In my opinion, it would be seen as a Ponzi scheme.
I agree.
Like,
I think so too. And the reason it's not seen as a Ponzi scheme, number one, is because right now the government bails out banks, and so
mm-hmm.
we don't see the result of it being a Ponzi scheme. And number two, because the government has mangled the law and they treat depositors as both lenders
Exactly.
and depositors, and that is not because of Rothbardian title transfer theory. It's
No, it's not.
it's
But
because
the problem is it gets murky in some ways because we are trying to reduce it to analyze. But yeah,
yeah,
we
yeah,
can do it.
but if
You
we,
need.
yeah, yeah, but if you reduce it to analyze it like I do, you come up with the result that we should have separate functions in society. One function would be warehousing, another would be credit intermediation, but there would be no fractional reserve banking possible under this system, and there would be certainly no federal deposit
Yeah,
insurance.
but we still have the possibility of these cracks that I say that people exploit as a feature.
I don't think so. I don't think so because exploitation. I mean,
Exploitation, not in the way leftists would
I know
say, but
you. I
I
know
say
I don't think
okay.
there wouldn't be a way to manipulate the system to basically get something for nothing. It wouldn't be
Mhm.
possible.
Yeah, these new constraints, I think they will help a lot to avoid it. But I think it's not just that. That is, it's not like it's not a simple answer. Let's say, oh, we just need to divorce this structure over here, and then it's solved. Obviously, you're right. But yeah, like
I think it kind of is simple. I think if you basically require disclosure so there's no fraud and you understand the way money really works and you understand that free banking cannot work in a free society, then there's really no problem to solve. And also, if you understand that there's inalienability, and any credit contract you have is enforceable only against identifiable future assets that are part of the contract, then what's the problem? And by the way, the contracts are not simple. They can be complicated. It can be, you pay me money in the future, and if you don't have it, you pay me future money, or you pay me money out of your assets that you own if I can seize them. As long as you agree to that ahead of time, I don't see a problem with that.
Yeah, that is not the main problem, because then you have a limited loan, in my opinion. The problem is this kind of well, I say the word usury just to say invalid loan contracts like this, trying to take something that you should not. They are well received for libertarians in some way. People do not even they just go like, oh, pacta sunt servanda, and you should shut up because you're a commie, you know. If you start to question like, oh, I think these contracts they do not make sense. This structure, this corporative structure does not make sense. Oh, are you against business? How can you tell yourself a libertarian, you know? And this is one of big problems, and you don't see that being discussed openly. Like, you are telling me new information right now about this Jeff Barr, Leah Goldin, Sean Gambit, and I'm telling you as someone who, because there is another problem. There's a problem, but it's a linguistic vice. For example, the translations. Libertarianism is not the same thing here in Brazil, because we have most of people do not read in English. Most of people do not read, but a few person read in English. So what they know is about translated articles and translated books. And the problem is, why they would translate something really technical and specific if you want to convert to the maximum number of people as possible for your idea, and then try to filter up people to learn English and do stuff. So we have this distortion over here, and it's in a good way, because it filter out a lot of let's say useless discussions, because here in Brazil is a different system. You know? But in the same way, we contaminated everything and simplified, oversimplified. That is what I'm not saying that I'm floating above that. I think in some way I'm affected by it, because a lot of my understanding over libertarianism came from Portuguese sources. And I'm not saying like the guys who are translating and doing everything they are a bunch of, let's say, conspirators trying to withhold the truth against us, but it's just like, specialized knowledge do not sell, and they have an economic interest to sell books and stuff. So I think this kind of discussion should be more mainstream. Let's say that is why I'm doing all of this writing, making videos, try to contact you. Even I'm thinking about in the future to contact Mr. Hopper, but I don't want to bother him so much as he's already.
Well, I'm gonna see him in a week in Istanbul. So if you got a question for him, I'll ask him.
Oh, if you I would ask a favor.
Okay, what?
Let's say, if you could summarize these ideas in a better way and explain to him, I think
I'll try. I'll try to describe it and maybe get him to record a 5-minute thing if he wants to. I'll let you know.
Oh, I would love it, because I was saying, like, I think by using his ethics, you can arrive in this conclusion, some sort of conclusion that we need to revise everything, you know, at least a revisionist call. We can get into it. But people like in Brazil said, oh, Hoppe never said that. So as I don't have, like, let's say the holy word of the Pope of libertarianism, I should not protest.
Okay, why don't you do this? Why don't you do this? And I need to go in a minute. So what I propose is this. I'll put this up, but I'll give you some links for you to look at, and then you can follow up on them, and we can talk further if you like. And email me or send me like a 1-paragraph summary of what you want me to say to him, and although I kind of have an idea, but just tell me what you think, what you want me to say. And then we'll follow up later after I put this up, okay?
No problem. If you can give me the links of Jeff Barr, Leah Goldin, Sean Gambit, Douglas French I already have, and I'm planning to.
Yeah, I'll send you
contact
privately some stuff, but I'll put it in my show notes when I'll put this up in a day or two. You'll see it in there too. But actually, Jeff Barr and I, we did about a two or three part discussion about some of this on my podcast last year. And we talked about some of the limited liability stuff there too. So you can, that's probably the best place to get their stuff.
No,
But
I'll go against like a bloody hound. Don't worry. I'm not even recording videos anymore because I'm being consumed by this topic.
All right, let me send you some links and I'll put them in the show notes and we'll follow up later, okay? But
thank you very much for your time, Mr. Kinsella.
Okay, we'll talk next time.
A pleasure.
Okay? All right.
Yes.
Bye-bye.
Thank you. Bye.